Bitcoin rises tepidly as government shutdown ends. Industrial growth in China gives copper a bid, and more. Robschild. It's finally here, the reopening of the government. We have a headline from CNN. Senate expected to begin voting toward reopening the government in next hour. Also from CNBC. Government shut down. House will vote on Senate deal ASAP, Speaker Johnson says. Good day all. It's Monday, November 10th, 2025. Our first headline, Bitcoin rises tepidly as government shutdown ends. You can see from the stock heat map that it was the whole market and some of the bigger names leading the way. Google almost up 4%, Nvidia up almost 6%, Tesla up almost 4%, Eli Lilly up almost 4.5%, and the S&P 500 as a whole up 1.5%, and we are only 1.3% away from all-time highs. This is all while Bitcoin is much further from its all-time highs. We're still, even with today's rise in Bitcoin, we're still 16% away from all-time highs. Since Bitcoin took over the leader position in tracking global liquidity, it has been the leader of the stock market. When Bitcoin does something, the stock market typically does the same thing after. And so with Bitcoin's rise today of 1% and still being so far away from all-time highs, tells me that this is this tepidness in Bitcoin, for me, suggests this stock market going up today is going to be very short-lived. If it was up 6% like Nvidia, at least that would give a little bit more confidence for me personally that we're going back onto risk on bullish mode. But for now, this up move in the S&P 500 looks to me like a fairly weak by the rumor kind of situation. After all, the federal government isn't actually open yet, and you're supposed to buy the rumor, sell the news. Well, right now it's sort of still a rumor, and when it's official, I think we might reverse course back the other way pretty quickly. And remember, I can be wrong, but another indicator, the Fear and Greed Index from CNN Business, we were in extreme fear. We're still in fear mode, very notably. We have a ways to go before getting to neutral greed or extreme greed. Second headline, industrial growth in China. They just released their CPI and PPI. Month over month, I believe it was October, was 0.2%, and their PPI was actually negative 2.1%. Well, Robschild, negative. Isn't that a good thing since it's not inflationary? So China's been in what we call a disinflation-deflation mode, where no matter what they do, they can't seem to get the economy going again. Believe it or not, this PPI number is being seen as a good sign because it's less negative than the last time that we had this report. And China being the largest consumer of copper, it's why Dr. Copper with a PhD in economics was able to rise 2.85% today. So think less bad or better growth expectations in China. We have more charts to talk about before we get there. Community topics. What moves did you make, if any, today? Comment below. Robschild does nothing, sits on hands. Coming up, we are missing, I counted them, 7 weeks now of initial and continued jobless claims. If we do get a reopening tonight, there's a chance that we will get at least some of this data on Thursday. This is weekly data that we've been missing for 7 weeks now. So we will be getting this information either this week or next week, it looks like. Also, December 5th is the next time that we get the next employment-unemployment report, which, since we missed 2 of them, it's basically going to be 3 all at the same time, is my understanding of this. So December 5th is the date there. And then 5 days later, we get the FOMC meeting. So this is going to be pretty wild, right? Like, this is the floodgates of information coming out 5 days before the FOMC meeting. I know there's about a 65% chance of another 25 basis point cut right now. If this data, for example, is way worse than they could have imagined, then it'll be a 50 basis point cut. And if it's peachy as all can be, then they might not cut. You know, right now with only 65% chance in the Fed funds futures, it's like we really could go either way at this point. But these initial continued jobless claims should give us a pretty clear clue once they start coming out either this Thursday or next Thursday. I'm so glad I was able to finally update this coming up section. For 39 days, we've been in limbo for economic data, and now we actually have data that will be coming out soon enough, I guess we can say. At least the FOMC will have, enough data to make a reasonable decision, based on data, not guessing. And never forget about those tariff updates. That's still a thing going on. As always, thank you for watching, liking, subscribing, commenting, and supporting Robschild. No changes to the crystal ball readings. And see my website link in the description to read through my daily reminders, macro views, portfolio explained, and stock research center. All free for now. On to the charts, the S&P 500. I mentioned yesterday, it looked like we were going lower with gaining momentum. And today we reversed that. And so I see this as more neutral than anything. I can't call it bullish or bearish on its own. Amazing how one of the world's biggest companies, Nvidia, can move almost 6% in a day, acting like it's a meme coin or a penny stock. Penny stocks are supposed to move more than the world's largest companies, but this is what happens when you price enormous growth into companies. The volatility can rise. Speaking of volatility, the VIX dropped down to 17.6, not in complete fear mode. VIX futures and contango, no problems here. Not currently expecting stocks to fall apart again. The 10-year Treasury note yield today rose by 3 basis points, really just going sideways since October 30th. HYG divided by high credit spreads tightened today. One thing to realize about credit markets and credit spreads is that stock prices do have an effect on the perceived credit worthiness of companies. When stocks are going up, it makes banks say, okay, yeah, we're more willing to lend you at lower rates. The point being is that when credit spreads tighten, it's not always necessarily a sign that things are peachy. It can be easily a sign that things are getting complacent. What I personally really watch out for is when you have a divergence, when you have HYG divided by SHI dropping while stocks are either going flat or rising. It signals that the stock market is likely to follow the credit markets in that case. Total 2, the crypto market minus Bitcoin, also rising tepidly, very similar to the Bitcoin situation. But with this one, it's just really typical, classic lower highs and lower lows. That's all it looks like to me. When you reach out into riskier areas of the market, what can sometimes happen is the riskiest things, when they start to show weakness, then the slightly less risky things can show weakness. They can kind of pull each other in different directions. The point being, this is not a very confident chart. This is not telling me, over the next week or month, right now anyway, to be believing that things are going to necessarily be bullish yet. With the rise in copper, it's kind of curious that the oil market didn't buy it. Crude oil's been going flat for a bit here. I still think this has more to do with disruptions from the Russian sanctions, which probably just takes time to iron out. And then chart-wise, what is happening in oil? We do see lower highs, lower lows. I know some people are talking about a cup and handle that looks bullish. Maybe. But with the federal government shutdown ending, what other good news could we have? China's getting pulled out of their economic glut. The U.S. federal government is reopening. There seems to be de-escalation of geopolitical things going on between countries. If there was a time for crude oil to get bullish, it would be now, and it's not. So maybe that'll change soon, but for now, this is the main thing I'm seeing: lower highs and lower lows. Silver rose 4.5% today. Also, gold rose 2.9% today. I can't really put my finger on why this is happening. Maybe the federal government reopening, meaning that they're going to start spending money again, is giving uncertainty, the kind of uncertainty that, gold likes. But, take a look at the dollar. The dollar went completely flat today. So that, along with the 10-year Treasury note yield not really moving. The next steps are really seeing the federal government actually reopening. That's number one. Number two, seeing how Asian and European markets react to that. And then number three, when are we going to get the data? We also have CPI that's supposed to come out this week. What is that going to look like? How are markets going to react? As well as governments and the FOMC. Also, whenever gold spikes, everyone's like, oh, inflation. Yeah, okay. Well, this is actually priced directly when you take a look at the 10-year break-even inflation rate. And what's happened? We rose by 1 basis point. We're at 2.29 right now. Still well within a longer-term pattern of lower highs and lower lows, and a shorter-term pattern of lower highs and lower lows. I also want to bring up today, for anyone that's worried about the 10-year Treasury note yield rising out of control, the 10-year minus 3 month is essentially at zero, or at 18 basis point spread. You're supposed to get a higher yield when you lend something for a longer period of time, especially 10 years. And this chart clearly says that the market is saying that conditions are tight. And the way that I like to say it or think of it is the Federal Reserve strangling the economy, keeping rates higher than they would normally be. I know there are voices out there that think, inflation being a problem means that the Fed should be keeping rates steady or raising rates, but this says otherwise. An 18 basis point spread is essentially zero. Now, with expectations of cuts priced into the 2-year Treasury note, the 10-year minus 2-year, it's further from zero. We're at 55 basis points, basically. But one thing I want to point out about this chart is that we have been going completely flat here since April of 2025. This is not super typical. My spidey senses and my crystal ball say that this is about to change. This is about to do something. What? I don't know. But, this is typically a pretty dynamic maturity spread. Usually it's either fallen or it's going higher. For it to be going completely flat for 8 months, it's not super typical. My spidey senses, they're sensing it. We're about to break out here. Last chart of the day relating to the Robschild portfolio, EWZ. This is a Brazilian ETF. It's been doing pretty well. Higher highs, higher lows, finding resistance at previous major pivot points. Like it says on my website, I'm looking for this to get down to a dividend yield of only 4%. And remember, this is while the S&P 500 is yielding only 1.17%. Is $1 of return worth 6 times as much from American companies than Brazilian companies? I don't think so. That's why I really like this position still. Also, quick short update on the Nissan stock. I know I was bringing that up. I went through the balance sheet and nothing's really changed. Again, they sold their headquarters to raise cash, which, since the company's been losing money, that helps strengthen its already very strong balance sheet. So it remains as one of my favorite stocks. And that's all from me and my crystal ball. Hope you enjoyed. Thank you for watching. See you next time. Robschild.